If you didn't think we were in a buyer's market before, there's no doubt about it now. My name is Lambros Demos. Welcome to Live at Lunch. Thank you so much for joining me. And as the title mentions, housing supply effectively doubled month over month from March to April. An astounding fact, an astounding number. But we'll get into that in a few minutes. Just want to mention as well that I have a special guest coming on today. I'll introduce him in a minute. Also excited to introduce the new media room here at my office. Very excited about that. And lots of great content coming your way that's going to be shot in this room. So looking forward to that. Looking forward to all the great stuff that's coming up as well. But before we get into the stats, I have a gentleman waiting here to get online. And this guy has been in the mortgage industry for over a decade. And he's got experience working with Canada's leading default insurer. Some of you may know Sagen. Some of you may have heard of Genworth. It's the same company. And as well, what I really like about this guy is that his passion is the same as mine, which is helping people make confident, informed decisions. So without further ado, welcome Tom Winski to the show.
Hey,
Tom, how you doing, brother?
good. How are you?
Good, good. How's your day going so far?
It's going. It's sunny. It's a Wednesday. I think buyers are starting to move, so I had a few phone calls this morning to get things rocking for a few folks. So it's a
Nice.
good day. How's yours?
Excellent. Yeah, pretty good. Been pretty little hectic. No, I mean, I was on my way here and I forgot to bring something. I had to turn back, go home, and so when it starts out a little chaotic, hopefully the rest of the day it's going to be a little bit easier. So, but that's all good. It's good. And thank you again for joining me and doing this last minute. I wanted to bring you on, obviously, to talk about the current market and what's happening. But before we get into that, I really want to talk about the industry, the mortgage industry itself, and the difference between mortgage brokers, mortgage agents, or bank representatives, because there seems to be a lot of confusion in the general public out there, and there seems to be this fear or maybe even distrust of mortgage brokers or mortgage professionals, same as realtors too, because we're probably the most distrusted industry on the planet. And this was sparked by a conversation I had over the weekend with a very nice young couple looking to upsize their home. And we were talking about refinancing. And so I made a suggestion that maybe they should, obviously talk to their bank, but maybe explore their options, shop around, talk to an independent mortgage broker to see what other options they have out there and what better, not just a better rate, but better terms they can get for their refinancing. And they seem to, take a step back there and they said, no, 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 we don't want to do that. We've talked to a mortgage broker before and it was a bad experience, blah, blah, blah. So they kind of have some PTSD about dealing with mortgage brokers. So that's why I wanted to bring you on here and just to explain a little bit about the industry and tell us what the main differences are between going to a bank rep and then talking to an independent mortgage professional.
Yeah, it's a fantastic question and something that should be highlighted. I think anybody looking to buy a home, refinance, transfer should be open to at least having a conversation with a professional, and that's the main difference. Bank representatives are bank representatives. Their best interest is to protect and sell their enterprise, meaning their bank that they work for. So they're not necessarily trained as a mortgage professional. They're definitely not licensed mortgage professionals. They don't have to be. Some may be. But on the other respect, let's just go back in time a little bit of how the broker industry started. And that was basically as an alternative network for lending for those that didn't qualify at the bank. So it very much started as an industry where, Lambros, you'd go into a bank and say, I'd like to get a mortgage, but unfortunately didn't qualify there. Then you would go and seek the advice and support of a mortgage broker. So what happened during those early times of mortgage brokering was predatory lending, right? So mortgage brokers charged commission, they charged upfront fees during those times, and it became very predatory. And that's what gave a bad taste in a lot of the public's mouths, right? It's similar to that in your industry as well, right? We're so interconnected. These things do happen. Now we've kind of moved into the modernization of having a professional in your corner. You've got a paint guy, you've got a landscaper, you've got a professional, somewhere doing something for you, why not have a mortgage professional in your corner? And what really separates us is the fact that we can deal with all types of lenders in all types of situations. We're your one-stop shop in that sense. We deal with your Schedule A banks like TD, BMO, Scotiabank. So we do have prime mortgages. We also have access to credit unions, which are fantastic options for small town Canada, small town Ontario, but also for the right client profile. They offer great rates, amazing service. And then specific to brokers, we've got monoline lenders. Monoline lenders are one channel, meaning the broker channel. They deal specifically in mortgages. They're able to offer flexible products, fantastic rates, and even better customer service. And if you're looking to refinance, purchase, transfer, having a plethora of options is always going to put you in a position of success, but also working with a mortgage professional will help highlight ways to gain the most out of your mortgage and save the most in the long run as well.
Absolutely. Absolutely. Wow. That's great. That's a handful there, and you definitely touched on a lot of good points. One thing I want to backtrack a little bit. You mentioned fees as well. So maybe there's a fear out there that if people go to a mortgage broker, they'll be charged a fee. So is that the case, or when do mortgage brokers charge a fee, and when do they not charge a fee?
That's definitely still a misconception. So brokers typically do not charge a fee for our services at all. We are compensated once we successfully arrange a mortgage solution for you, and we're paid a finder's fee from the lending institution that we pair you up with once your mortgage closes. Now, there are rare instances where a fee is charged. So, for example, it could be private mortgages would probably be the best example of that, where we are the matchmaker. We're bringing you a lender. You probably have maybe a higher risk profile,
Hmm.
higher risk property, whatever it may be. So for that brokering service, there's a lot more work that is done in that case, and we're customizing a solution for you and matching you up with a lender. That's when you'll see fees of around, 0.5 to 1.5% of your loan amount.
Right. Right on. That's great. So going back to my business as well, sometimes a client will approach me and they'll want to look at houses, and my very first question to them is always, "Have you been pre-approved?" And sometimes they'll say no. We'll do that when the time comes, et cetera, et cetera. So that to me, I mean, I can get into it all day, but from your perspective, when should a person looking to either buy a home or refinance, because you take on both, right? It's okay.
Correct, correct.
When should they start dealing with a mortgage broker? When should they start reaching out to a mortgage broker? Because always here, oh, I don't want to waste your time. I don't want to waste their time, etc. But it's the opposite that's true, at least for me, because I'm wasting my time showing houses if I don't even know if these people are going to get approved or not, right? So,
Yeah.
what's your perspective on that?
So, I mean, the earlier the better. That's the general answer. But if you're renewing, so let's take that bucket aside. If you're renewing, you're gonna want to start hunting about 60 days before your renewal date.
Mm,
The reason is we can lock you into at least a pre-approval or a rate hold period. So give us some time to see what's out there, structure everything, gather the documents so we're not really, scrambling at the last minute, and we can start running scenarios of what a different solution for your mortgage might be. And that might be staying with your bank, right? Running through that renewal offer that they offered you and seeing what's out there and saying, you know what, Lambros, it's probably best you stay with your bank. It'll cost you X amount to leave, and that just doesn't make sense right now. So on the purchase side, I would say the earlier the better in having a conversation. There's many a times where first-time home buyers get overwhelmed with the process because they've started a little bit too late in it, right? They're just trying to jump into it. All of a sudden, you're getting pre-approved. All of a sudden, you've got showing appointments with your realtor in a couple days, and you're kind of under the gun. So the earlier the better. I would say the best advice is at least reach out to have a conversation, and then we can start building the timeline that works best for you.
beautiful. Yeah, that's great. And you obviously deal with first-time home buyers, correct? Right.
Absolutely.
So
Love working with first-time home buyers.
excellent. Excellent, me too. And there are some incentives for first-time home buyers. And now, I mean, we'll get into it, but it's a great opportunity now for first-time home buyers as well. If you can just quickly touch on why it's a good time for first-time home buyers right now, and what are some maybe government incentives or programs that first-time home buyers can take advantage of?
Oh, you just opened the door to Pandora's box here because there's quite a few advantages to being a
Okay.
first-time home buyer in today's market. So,
All right.
the first being the insured mortgage cap. So, insured mortgages are high ratio mortgages, meaning you are putting less than 20% down. So, yes, in Canada, as well as the province of Ontario, we're able to buy your first home with less than 20% down. The threshold used to be $1 million dollars of purchase price. That's now moved up to 1.5 million. So you can put a minimum 5% down on a $1.5 million purchase. But you got to be able to qualify, right? So
Of course.
that has also changed as well. So for first-time home buyers, the goalpost has also moved from amortization. Amortization is the length of time it would take you to pay off your mortgage. And in Canada, we can go up to 30 years. That guideline has changed. It used to be 25 for first-time home buyers. Now it's moved up to 30 years. So
And that's,
that
sorry to interrupt
increases.
you, and that's with a 5% down as well. You can go up to 30
Correct.
years.
Yes, absolutely. So you can go up to 30-year amortization with less than 20% down. The main difference as well is between the 25 and 30-year AM and qualification is it improves your qualifying by 20, 40, $60,000 depending on your income level. It
Hmm.
opens the door to a different property range, a better property range that makes more sense for you and your first home purchase. And then on the other side of all of the guidelines and rule changes comes the first home savings account, right? So, first home savings account is a fantastic tool. You can withdraw $40,000 tax free for your first home purchase. You just put it in there. You can contribute $8,000 a year. So, when we're talking about when should a first time home buyer call me, as soon as possible. So, we can start building that plan in the first home savings account deposits, right?
Okay.
But more so, RRSPs have now been increased to $60,000 from $30,000. So doubling the amount each home buyer. So if you've got you and a spouse or a partner coming on to buy a property together, that's $120,000 you can redeem from your RRSP tax free. The only caveat is it is repayable over 15 years, and there's a few different strategies to take into place. But this makes it a fantastic time, and some might call it the Goldilocks moment for first-time home buyers
Right.
because interest rates are down as well, right? We're down 6% from where we were last year in terms of interest rates.
Right.
We're seeing very stable rate market right now, which is really good. But home prices are starting to warm up. So I would actually ask you maybe what do you see out in the market in terms of first-time home buyers? Are you seeing a lot more movement?
Uh, well, we're not seeing much movement at all, actually. And we're going to go through the stats in a minute. Things are slightly better month over month. It's been a brutal year. March was the lowest March for home sales in 30 years. April, not much different. If you take out the pandemic year where real estate basically stopped, again, it was the most brutal numbers we've seen in almost 30 years. So, not much movement at all, but I agree with you that it is a good time for people to take advantage of that because there's less competition. Obviously, prices are lower, interest rates are lower. There's hardly any competition. What more could you ask for, right? When you're trying to buy a home,
Yeah,
right?
I
So,
actually
yeah.
I've been seeing the Treb, and maybe we're jumping ahead of ourselves here, but I've been looking at the Treb data as well, and I'm seeing my clients actually jump into some competition because those first-time home
Mm,
buyers are far more qualified than they
right.
used to be back in the day,
Yeah.
right? When we take a quick jump back into 2020, the COVID era, anybody and everybody was jumping in the pot. It was the herd
Right.
mentality, right? Like we have
Yes.
to buy it. It's the fear of missing
Yeah.
out. Ultra low interest rates. It's now or never, right?
That's right.
Where now we have very qualified buyers. We saw the bank of mom and dad come in pretty heavy.
Yeah.
About 26% of files now have a gift attached to them from parents. So, when I'm looking at the Treb data, sale price to listing price ratio is where I focus and kind of lean my buyers towards.
Yeah.
And I'm actually seeing some markets getting really, really hot, but I'll save that for when we start talking about
Yeah.
a few of those stats.
No, no, that's cool. That's cool. But I mean, you talk about opening a Pandora's box. So when you talk about
Yeah.
the competition and things like that, that in itself has changed quite a bit from the COVID years. Like people, you saw 20, 30 offers. It wasn't unusual for that. Houses would sell in hours, never mind days. And people would be bidding hundreds of thousands of dollars over the asking
Yeah,
price, right? Today's a little different. Sure, there might be competition out there, but it's not unusual to see if there's, five offers on a property, that four of them will be under the asking price, right? And with conditions, because in the COVID years, we didn't have any conditions.
correct.
People were dropping their finance, people were dropping their inspection conditions, et cetera. Now they're just going in with conditions, et cetera. So, and may the best offer win. And that's great. I love to see that because buyers are being more prudent, and they're not taking these crazy risks that they were doing before.
It's
So that's
purposeful. So yeah,
exactly. Yes, yes. And the way I see it is wherever there's value, there'll be buyers, right? So I mean, if a property is worth $1 million, but it's listed at 900 or $800,000, obviously it's going to attract attention and it's going to generate offers. So that mentality is still there, right? People underprice it and then boom, 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 price goes up from there. But sometimes it backfires. And again, I can talk about this all day, so I don't
I
want to
know
get
we
into
both
it.
can, yeah, as we
Yeah,
do when we're together anyhow, we get into that conversation. But I
yeah,
mean, there's so many numbers and it's hard to really time it. That's my main point of this is,
exactly.
I've had conversations even way back after COVID kind of ended, right? So, you had buyers like, I'm just going to time it. I'm going to wait for the interest rates to go down. Okay, well, compared to last year, key interest rate is down significantly.
Exactly.
Interest rates down
Yeah.
significantly. So you told me you were waiting on the sideline for the interest rates to come down. They're down. You
Yeah.
told me you were waiting for home prices to come down. They have. So where are you now?
That's right.
And right now you're seeing purposeful buyers out there looking for the right property
Yeah.
and willing to spend on that
That's right.
property.
And now the excuse is the economy or the tariffs or et cetera. But there's always going to be something. There's
Correct.
always going to be an
Correct.
excuse, right? There's always going to be
Correct.
something like that. So again, that's great because we can talk about this forever. But before we move into the stats, I just want to be clear on the definition of a first-time home buyer because correct me if I'm wrong. It's not somebody who necessarily has not owned a home or a property, right? There's a bit more to the
Correct.
definition of first-time home buyer. If you can elaborate on that.
Yes, that's an excellent question. And again, a common misconception out there. So, a first-time home buyer, the obvious is you've never owned a home. So, that's option one.
Mhm.
Option two is you haven't owned a home in Canada in the last 4 years or anywhere in the world in the last four
Right.
years. So, for example, if you owned a home, sold it, had to move back in with mom and dad or family or into a rental, and you stayed in that rental for 4 years and now are looking to re enter the market, you are considered a first-time home buyer. On the last end of it is if you recently experienced a marital breakdown, so recently separated, recently divorced, you are also considered a first-time home buyer. Now, on the land transfer tax rebate side of things, you would not be receiving that land transfer tax
Right.
rebate a second time. However, you would get the access to the qualifying spectrums
Right.
of the
Right.
first-time home buyer, which is a significant advantage.
Yeah, yeah. So that's the distinction that needs to be made because that term first time home buyer is thrown around in both scenarios. Yeah, so that's good. That's good. Thank you for clearing that up. Awesome.
No problem.
So let's jump into the stats here. And as I mentioned off the top, inventory has effectively doubled. And I'm looking at the stats, and I think there may have been some mistake or something when I was looking at them, because in Toronto I see supply in March was just over 5,100, and in April it was 10,500 plus, right? So that's almost double there. In Mississauga, same thing. 1186 was the number of active listings in March. That jumped to 2391, right? In Brampton, it went from exactly double. It went from 1105 to 2210. And in Oakville, it went from 688 to 1346. And I'm picking on these four specific areas because these are the main target areas that I work in. So hopefully you're okay talking about these four areas here. So when I'm looking at this, it's like either there's a mistake going on or, maybe, you know, I'm not a conspiracy theorist or anything like that, but how can they double in all areas everywhere? Do you have any theories on that?
I would say it's a lot of investors dumping property, trying to move away from, potentially a volatile rental market that could be headed our way. Our new government has imposed some ideas on how to increase supply, specifically in one sector, multi-residential. So that means condo units. We're
Mm.
already saturated in that market to begin with, and now we're just going to be focused again on that market. So I feel people are offloading properties, especially those numbers in the GTA, obviously inflate some of the other statistics that we see in other territories as well. Mississauga, Peel, huge condo market there. Brampton starting to get a few more here and there. So I guess my conspiracy is, were these owner-occupied properties being dumped?
Mm.
Likely not.
Yeah.
If they are, you're seeing transactions rise in other markets, suburban markets. Like we're seeing Vaughan. I've got the number here. Vaughan, 110% sale price over listing price. So you're seeing hot competition in Vaughan. 117 in Stouffville, Oshawa, right near the GM plant that unfortunately just saw some layoffs and shifts due to the tariffs. They're up 110%
Right.
sales price. So
Right.
I'm assuming in those markets it could be investor based.
Yeah, no, that's a great point, and I think you're onto something there because it was maybe about 4 or 5 years ago where there was a boom in buying pre-construction, right? So and now that those places are coming due, maybe people can't qualify, can't close, etc. So a lot of these are people trying to sell them before they can close on them. They could be assignment sales, or they could be people who maybe have closed on them in the last year or so, but now find it difficult to keep up with those payments. So I think you're right. There could be a lot of condos in here, investment properties, etc. Yeah,
Yeah,
absolutely.
and with
Yeah.
the assignment sales, a lot of property dumping is happening when it comes time to their approval on the appraisal side, right?
Right.
You went to a builder, you bought a condo unit for 900,000, and unfortunately it's appraised at, 700,000.
Right.
And that's where a lot of buyers have gone to the, idea of we've got to dump this property. We can't afford the extra $200,000 to put down. So what do we do? And
Right.
that's where I see, potentially some inflation in those
Yeah.
numbers.
Yeah, that's good. So I mean, but it's not all doom and gloom. I'm looking at the actual sales volume. It's like I mentioned earlier, it's down in over the last couple decades, but month over month things are picking up slightly, so that's good. In Toronto proper, it was up about 12% month over month. In Mississauga, up about 7%. In Brampton, up 34%, which is interesting. Brampton's always
It's an
on
anomaly
the
for sure.
extremes, right? It's the Wild
Yeah.
West. So when things are good in Brampton, things are really good. When things are bad in Brampton, things are really bad. And in Oakville as well, up about 25%. So that's a good sign. From your perspective, are you seeing more applications come across your desk? Are you seeing more pre-approvals coming in? What's it like daily for you?
Definitely seeing more applications that I mentioned when we jumped on the call. I just was on the phone with a few couples looking to purchase their first home,
Hmm.
right? But what type of applications I'm seeing are purchases,
Okay.
right? We thought the renewal wave, which was being touted for the last year, was going to hit. Banks have become a lot more aggressive in retaining business. So it's actually been purchases coming across my desk more frequently. And again, it's coming back to those, you know, well qualified professional buyers out there, households that are making 200,000 plus, strong credit reports, good savings, good fallback, minimal debt utilization. These are the type of applications I'm seeing now. And these individuals typically turn from pre-approval to buyer within 2 to 3 weeks. So we're seeing very, very qualified individuals. And if I could touch on, the pandemic era one more time, it's the good part about that, and it's hard to nitpick a good thing about a pandemic, but we as an all Canadians saved a ton of money during that time, right?
That's right.
Everything was virtual, just like we are. So, you didn't have to buy pants. Everything was from the waist up, right?
Yeah.
You weren't going to restaurants spending money. You weren't, going out to buy things, luxury item spendings. So we saw our bank accounts rise. And in across the big five banks, you saw it to the tune of a couple $1 billion in savings.
Mm.
And so now, there's that pent up savings and the pent-up demand of finding that quality property.
Yeah.
So translating those applicants that are coming in, they've got that savings and now they're ready to spend.
Yeah, yeah. Unfortunately, some of those savings were eaten away with the inflation over the last few years and high
Correct.
interest rates as well. So we had a double whammy of that happening. But
Yeah.
at least we were well prepared, and like you said, people were able to save enough for that to ride through all the expensive times
Yeah.
there. For sure. So speaking of expenses, the last thing I want to touch on is home prices. I don't put too much stock into month over month fluctuation of home prices because I mean, it's better to look at the trend of a few months. But just briefly, Toronto went up about 3% month over month. Mississauga went down 5% month over month. Brampton pretty close, pretty flat, down about 1%, and Oakville about 4%. But Oakville is a very small sample size, so that's why I don't really want to put too much into it. But it's interesting that in Toronto and Oakville, things went slightly up, and in Mississauga and Brampton, things went slightly down. So I'm going to call it a wash. From my perspective, I think home prices haven't really been affected yet, even though we have lots of supply coming in as well. Where do you think home prices will be going? Do you think they're going to stay flat pretty much for the year? Do you think they're going to go up? Do you think they're going to go down? What's your take on that?
Over the last few years, we saw home prices rise in some markets almost
Hmm.
60%,
Yeah,
right? And then coming out of the pandemic era, we saw a flatlining or a stabilization, right? So residual equity is the main term here. We saw about 47% in the GTA market of residual equity earned, right? Over a
yeah,
3-year time. That's crazy.
yeah.
So seeing flatlining over the last, 8 to 12 months is kind of expected. I wouldn't call it depreciation in home price, even when you see, the market dip in certain areas, 3 to 4%. That's more of an adjustment, right? So I'm gonna, say cautiously that we're likely to see a stabilization in home prices. However, expect competition on certain types of property,
Mhm.
right? Detached homes are still, sought after, especially if they have nice, larger lots.
Yeah.
Townhouses are, in my opinion, the strongest property type right now across the GTA. We're seeing really strong numbers in terms of home price appreciation in those markets.
Is that because
But
of an affordability perspective? Is it
I would say it's a little bit
price
of a
point?
affordability factor, but also maintenance
Oh,
factor, right?
okay.
So
Yeah.
you're
Yeah.
seeing even freehold as well as condo townhomes. People just don't want to deal with a massive lawn. I've got a decent sized lawn. It sucks in the middle of August to mow that thing at 30
Right.
degrees, right?
Right.
But
Right. Right.
so I think it's a maintenance, snow shoveling, plowing, things like that. I think, younger individuals, treat their homes essentially like condos and hotels, right? So
Totally.
they don't want to deal with the salting and the snow plowing and the maintenance. So I think that's why townhouses are a lot more appealing these days.
Awesome. Yeah, that's a great point as well. And speaking of maintenance, it's not just the amount of work that you have to do, but how the property has been maintained. Because those are usually the properties these days. When there's a ton of competition out there, why would somebody go to a house that doesn't look good versus one that does show well, that has been maintained, et cetera, et cetera. So it's even more important. Curb appeal is important. Maintenance of a property is hugely important these days when people are out looking at houses. So I just want to throw that in. So we'll be wrapping this up in a minute, but I just want to give you an opportunity if you have any parting thoughts or anything like that, any other ideas you want to throw out there
Yeah, I
before
think
we go.
the parting thought would be if you're interested in purchasing your first home, whether it's now or sometime in the near future, even a year out from now, just make that call. Call Ambrose, give him a call, have a good conversation, trust your mortgage professional, trust your realtor. They're professionals in the market. We're professionals in the market. We will steer you to your best interests, always keeping you in the driver's seat. So it's never too early to start. It's never too early to start having a conversation as well. So my parting thought is just reach out, have a conversation. We're
I
here.
agree. Can't agree more with that. Where can people contact you? Where can people reach you?
So I'm pretty reachable on Instagram. My handle is at TomFundsIt with an S, so FUNDSIT. Or you can give me a call anytime at 647-643-9092. That's the best way to get in touch. I love conversations, Zooms, FaceTime, meetings in person. I prefer that, so I'm fairly reachable in that sense.
Excellent, excellent. That's great. And before I let you go, who's going to win tonight, Leafs or Panthers?
I'm a Leafs fan, so Leafs all the way. We'll see how
Yes.
well they do. I've got my defibrillator on standby
Ah,
because they seem to let
yeah,
us wait till the last second every
yeah.
single game. So, go Leafs,
Nick,
go.
goalies go. Right on. Okay, thanks very much, Tom.
All
Appreciate
right,
you
thank
coming
you,
on
Lambros.
today. All right, take care.
See
Bye.
you. Bye bye.